Hello friends, now we'll take this topic called professional and ethical duty of a chartered accountant. This topic is directly from your auditing syllabus. Do you remember in auditing also you have similar topic? Do you have similar topic in auditing subject also? Code of conduct, professional ethics? Yes. And this chapter is a part of that chapter only. Although here our discussion would be more related to those area of code of conduct which are related to financial reporting. Very nicely they have merged the concept of financial reporting with the professional and ethical duty of a chartered accountant. So question would be related to financial reporting. For example, they will say this company has not followed Ind AS 116 because they don't want to bring liability in the books. As a chartered accountant, what is your professional and ethical duty? Okay, company does not want to make provision because they want to increase the profit. So what is your professional and ethical duty? So first part of the answer would be discussion of relevant Ind AS. It can be based on any Ind AS. It can be based on Ind AS on leases, revenue recognition, property, plant and equipment, provisions, contingent liability, statement of cash flow, anything. And second part would be you will have to apply the code of conduct, code of ethics and see which clause of our code of ethics is getting violated here. What is the mistake the accountant or the management is doing, or what should the accountant do, chartered accountant do, so that this does not happen. So all these are covered by the standard. I am not a teacher of auditing. Okay, this is already covered in auditing in detail. So you will excuse me in case if you find that I am not covering in detail, because it will be covered in detail in a separate subject. Ideally this topic should not have been there in financial reporting only, because it is more about code of conduct covered in auditing syllabus. But because it is there as a part of the syllabus, I have to teach to the best of my abilities, and you have to understand to the best of your abilities also. Okay, so first paragraph is a general knowledge question. What are ethics? So one dictionary called Merriam-Webster dictionary calls ethics or ethics as moral principle. These are very difficult terms to define. What is ethics? What is morality? You don't have any specific answer for that. Okay, different people may have different answer. One of my teachers used to say CA and ethics don't go together only. That is, teaching ethics to CA itself is paradoxical. So what is according to you ethics or morality? That is what is expected to be done by you, okay, as a professional, which will ensure that your integrity is not compromised, okay, which ensure that you are objective in your judgment and analysis, which means you are taking all necessary professional care, okay, you are making all due diligence, you are applying all your professional skills in executing your task. You are not influenced by others, you are not coerced by others, you are not threatened by others. You do what is right and should be done by a professional. Okay, so I always say do what is right and not what is convenient. That is my definition of ethics and morality. Do what is right, not what is convenient. Okay, those who have attended this lecture from the beginning till now, you must have realized that I have done what is right rather than what is convenient. I could have completed the syllabus much before, okay, than today. But then we have taken so many questions, so many examples, because I know this is the right thing to do. This is the right way to teach the student of a final level, because the exam is of altogether a different standard only. I could have skipped certain questions. You will never know. I could have skipped certain concept. I could have reduced the number of MCQs also for discussion in the classroom. But that is not right. I will not do what is convenient. I will do what is right. That is how a professional should think, behave. Okay. Lot of people have respect for the professionals. People admire professionals. People look upon professionals as role models. The society have a high regard for them, and therefore they have to ensure that their conduct also carries moral values. Okay. Ethics are the principle that guide how we behave and make decisions. Again, these are very subjective concepts, but still there are certain basic set standards which is acceptable by the society, which are acceptable in the professional parlance, and that is how a professional should behave and take decision. They govern an individual's conduct, correct? Depending upon what are your ethical principle and what are your moral principle, it will affect the way you do your work. Okay. If you are a suppose chartered accountant who wants to earn as much money as possible, he will take more and more clients, and if he takes more and more clients but he does not have resources to perform the task as required by the professional, the quality of the work will be affected. But his ethics and morality says, I want to earn more money, come what may. But there may be professionals who would take less number of job because they have limited resources, but whatever job they will do it to the best of their abilities. So that can be an ethical principle. Somebody can accept bribe and may not prepare the report as it should be. Somebody may resign from the job. Somebody may quit the assignment, but he will not write something which is against the professional standards. So that is how ethics and morality govern our behavior. Ethics are also dealing with distinguishing between what is good and what is bad. Even though it is not officially written anywhere what is good, what is bad for everything, in code of ethics they have given a list that this is what is expected from professional or chartered accountants. Not everything can be written in black and white. As a professional, we have to know as to what we are doing is right or wrong, good or bad, and it involves understanding our moral duties and obligations. Understood? As a professional, we have moral duties and obligation towards various stakeholders, including the society where we live. If you are a chartered accountant and if you are drinking and dancing on the road, okay, not behaving properly or misbehaving with people of other gender and like that, then people will think what kind of CA is this? So they will not take your name, they will take the name of the entire profession. In the newspaper headline sometimes it comes, a chartered accountant commits fraud and goes to the jail. Everybody looks upon us as suspicious person. We come under doubt. Act of one CA or few CAs can affect the reputation of the whole fraternity. It is our moral duty that inside the office, related to work, or even outside the office, not related to our work, we must conduct ourselves so that our profession does not come under disrepute. That is my moral duty, that is my obligation, even though it may not be my legal duty. Okay, I can drink and I can dance on the middle of the road, on the middle of the day, let people laugh. That is my personal choice. But I am a chartered accountant. Okay, it will bring lot of disrepute to the profession and to the professionals if I do such kind of behavior. Okay, and therefore we have to be careful about our conduct, about our behavior, and that is what is ethics about. Ethics can't be taught, although I am teaching, but trust me, ethics is something which is very personal. And how do you value things, how do you value other people, that is your personal perception, and that is your personal ethics. So that was my small lecture on ethics. I am sure you did not like it, but still it's okay. That is my ethics. Whether you like it or not, I have to provide good information, correct information, principled information to you. If I also start dancing on YouTube every day, then what kind of respect the student will have for the teachers? You can understand. So chartered accountants are very respected professionals. Once you will become CA, which you will become soon, you will realize how much respect you have started getting from people around you, from the society in general, from other professionals. Go to any place, submit your visiting card which contains chartered accountant, CA as a prefix, and you see how much respect you will command. You go to any other country also, and if you say we are chartered accountants, yes, you will get lot of command. Therefore, the institute also thought that we should have code of ethics for our members, because we have to maintain the dignity and respect of this great institute. So they have come out with code of ethics 2019, which is, I think, the updated one, is a set of rules for chartered accountants. Set of rules, that is, we have to follow. Those who are members of ICI, they will have to follow this set of rules. The code is based on International Federation of Accounts, International Federation of Accountants Code of Ethics. All these details you have to remember for MCQ questions, that this code is based on International Federation of Accountants, and it has become effective from 1st July, which is our Chartered Accountants Day 2020. The code defines fundamental principles for chartered accountants. We are going to discuss in detail what is fundamental principle, like integrity, okay, objectivity, professional care and due diligence, professional behavior, observance of law and regulation. These are some basic fundamental principle for every chartered accountant. The principle gives the behavior and responsibility of accountant, how we should behave, what are our responsibility in serving the public interest. And then you will also learn in this chapter, the code includes a conceptual framework. Whenever you are having doubt as to what you should do, refer the conceptual framework that helps accountant identify and address threats to following the principle. Whenever you find that there is a threat in following the fundamental principle, as to what should be your duty at that point of time is given by the conceptual framework. It provides requirement and application material on various topics. Our code of ethics provide requirement and application material on various topics to assist accountant in applying the framework. So this is about your introduction. The principles laid down in the code of ethics pertaining to. Now the institute has given a disclaimer here that you are right now a student of financial reporting, but the detailed principles relating to case study, review and other assurance engagement, including independence standards established by the application of the conceptual framework to threats to independence in relation to those engagements are dealt with. So where are you going to study this in detail? In your another subject called Advanced Auditing, Assurance and Professional Ethics. So thank God I don't have to teach you everything. Our responsibility is only related to financial reporting. Now we'll discuss briefly what is Chartered Accountants Act 1949. In order to become a member of ICI, you must qualify as a chartered accountant. All of you are aspiring to become chartered accountant. These two letters before your name will change your life forever. Trust me. Okay, this is not a simple ordinary degree. All other degrees on this planet, or at least in our country, cannot be compared with the chartered accountant degree. Okay, you have that signing power. At the age of 21, you can sign the balance sheet of any company in India. You can certify any document in India, and that is acceptable. That is acceptable to the highest authority in the country, that yes, this is audited by or certified by a chartered accountant. And after you qualify, you register with the institute. But once you become member of the institute, it is not easy. You have to follow the professional and other conduct. There are professional conduct, there are other conducts which are given in Chartered Accountancy Act 1949, and if a member is found guilty of professional or other misconduct, they can face disciplinary action also. The institute has a disciplinary committee. They will call you, they will ask for explanation, they may even prohibit you from taking assignment for a certain time period. Is it right? One of our students who was working with a chartered accountant, the chartered accountant did not pay salary only. The student worked for so many months and the chartered accountant did not pay salary. Then we had gone to the institute disciplinary committee, and then the chartered accountant, once he got to know that the employee has filed a case against chartered accountant in the disciplinary committee, next day he made full payment, including bonus also, because nobody wants to take the risk of facing the disciplinary committee. Okay, so that is the power. Even if your boss is suppose not paying you stipend, go to the disciplinary committee, they will take action because they are supposed to pay stipend on time. The disciplinary action is governed by section 21 of the Chartered Accountants Act. All these facts you have to keep in mind for the purpose of some MCQ if they ask. According to section 22, professional or other misconduct shall be deemed to include any act or omission provided in any of the schedules of the act. So the student will know that there are certain schedules in the Chartered Accountants Act. So any act or omission to do something will be amounting to professional or other misconduct. Now next is professional misconduct. It is defined in part 1, part 2 and part 3 of the first schedule. But don't take tension. You don't have to remember in FR all this. But because FR and audit are in the same group, you will have to study them. But today in our FR we don't have to discuss each and every clauses of this first schedule, and professional misconduct is also given in part 1 and 2 of the second schedule. Whatever is relevant for our FR, we are going to discuss them. The second schedule, the schedule contain provision for expected conduct of the chartered accountants. Who are you? You are chartered accountants. Once you qualify, and therefore we expect certain conduct from you. You are a responsible member of the Institute of Chartered Accountants. Your conduct will define the dignity of the profession, and therefore you must follow those code of ethics, code of conduct. Members means chartered accountants who are member of the institute, whether in practice or in service, must follow the provisions in the relevant part of the schedule. So all the chartered accountant members, whether you are practicing or whether you are in employment, you have to follow the relevant provisions of the schedules. And if a member is found to be guilty of any act or omission, you don't follow, you will be called as guilty of professional or other misconduct. And there is other misconduct also, that is outside your working. Other misconduct is defined in part 4 of the first schedule and part 3 of the second schedule, that is called other misconduct, other than professional misconduct. And this provision gives the council the authority to investigate any misconduct by a member. That means even if it is not a professional misconduct but other misconduct, the institute council has the authority to investigate any misconduct even if it is not related to professional work. Sir, why we need to follow so much code of ethics and code of conduct? The answer is, you are a responsible person. You are not an ordinary person. Once you become CA, you are carrying a big responsibility on your shoulder. Children will look upon you. When I was a student in 10th standard, how I became CA? So this is my home, and there was a CA office about, let's say, half kilometer away from my office. The name of that CA firm, Golcha and Company. And I used to see that lot of people, big people, respected people of the society, many ultra rich people, they used to go and they used to wait outside his office, and when Mr. Golcha used to say, come inside, then they will go inside. He will talk to them. Golcha ji will meet income tax officer. Golcha ji was chairman of a lot of chambers of commerce and other big institutes or organizations. Then I thought, oh, this is the power of CA. Even income tax officer, they talk respectfully to a CA. Now I will also become CA. That is the impact of a chartered accountant. Young people look upon them, and therefore you have to maintain high standard of integrity. But suppose I found that Golcha ji is handcuffed by police, he has done some fraud, would I like to become CA? No. If you find your CA is misbehaving with the female employees, would you like to become such CA? The answer is no. Therefore, we have to maintain high standards of ethics and conduct in both professional and personal matter also. You can't commit a fraud, okay, even if it is not related to profession. The institute can take away your membership also if they want. Any deviation from the standard, even for non-professional work, can lead to disciplinary action against the member. So if you are a member of the institute, then you have to ensure that within profession or outside the profession, you have to maintain certain conduct. So this is a quick summary of what are the different types of schedules and what are the part 1, part 2, etc. I am sure you might have studied this in auditing subject, or you will study if not yet studied. So first is type of schedule, first schedule, second schedule. I have already given my disclaimer that I have very limited knowledge about in-depth understanding of this schedule. It has never been a part of my teaching activity. Okay. So I will try my best. So schedule 1 has 4 parts and schedule 2 has 3 parts. That is what I have understood. And what is the part 1 of first schedule? It is professional misconduct in relation to chartered accountants in practice. So this is applicable for those who are into practice. There are only 12 clauses. OMG. In auditing you have to remember. Then part 2 is professional misconduct in relation to members of institute in service, those who are in employment. There are 2 clauses. And part 3 is misconduct, professional misconduct in relation to member of the institute generally. So these are professional misconduct for all the chartered accountants. There are 3 clauses, and this is other misconduct. Other misconduct other than professional misconduct in relation to member of the institute generally. So applicable to all members of institute, and there are 2 clauses. Then there is a second schedule which has 3 parts. Part 1, professional misconduct in relation to chartered accountant in practice. There are 10 schedule. Part 2, misconduct in relation to members of the institute generally. So here we don't have members of institute in service, that is professional misconduct applicable to all chartered accountants. And part 3 is other misconduct in relation to member of the institute in general. There are only 1 clauses. We don't have to read all these clauses in our current topic. Okay. The clauses covered in part 1, 2 and 3 of second schedule have been shown in the form of flowchart below. So there is a small table below where we are going to have a discussion of what are the clauses of part 1, part 2, part 3 of second schedule. Second schedule has 3 parts. Okay, first two are professional misconduct, the third one is other misconduct. However, for detailed explanation, oh my God, again go to your auditing subject. Okay, so today we'll stop here. We'll continue tomorrow. Thank you very much. Hello and welcome back to this wonderful topic, professional and ethical duty of a chartered accountant. The topic is quite interesting. It is a combination of knowledge of financial reporting and one of the chapters in your auditing syllabus, professional ethics. So we have seen that there is first schedule, second schedule. First schedule has 4 parts, second schedule has 3 parts. Now we'll quickly discuss the clauses covered in part 1, 2 and 3 of second schedule. This we are going to cover part 1, 2 and 3 of second schedule because they are going to have a more impact on the financial reporting. And if you are very keen on understanding detailed explanation, kindly refer to auditing subject. So we are on second schedule to the Chartered Accountants Act 1949. Second schedule to the Chartered Accountants Act 1949, and we are discussing right now part 1. There are 3 parts in second schedule. Part 1 is related to chartered accountants in practices, which have 10 clauses. It is your duty to remember these 10 clauses. Okay, This will help you in auditing subject also. And as I said, this is a financial reporting subject, so we are not going to spend too much time. We are going to discuss, but not too much time like auditing subject. Okay, same thing will be explained in auditing also, don't worry. So what is clause 1, part 1, schedule 2? Discloses information acquired in the course of his professional engagement to any person other than his client, so engaging him without the consent of his client or otherwise than as required by any law for the time being in force. As a chartered accountant, you can't disclose information about your client. Very true. You are going to audit a client company. You get to know lot of information. You get to know about their process, their internal control system, their cash flow management system. You are also able to see their profitability, okay, much before it is made public. Can you disclose it to anybody other than the client? If you want to disclose it to anybody other than client, you have to take the prior consent of the client, or it should be allowed by the law. Then you can disclose. If you disclose without permission of client or the law, it is a professional misconduct under clause 1, part 1, schedule 2. And during the course of audit, during the course of accounting, we do get to know lot of financial information and other business related information about the client. Clause number 2, part 1, schedule 2. Certifies or submits in his name or in the name of his firm a report of an examination of financial statement, unless the examination of such statement and the related records has been made by him. Imagine you are signing a document and you have not examined those documents. This is such a gross professional misconduct. Okay, by either you should examine, your partner, employee of the firm should be examined, or another accountant in practice. Without examining the information, you are certifying in your name. This is a very gross professional misconduct. Is it relevant in financial reporting? This may not be relevant for our financial reporting subject right now. Even the first one is not very important. Okay. Clause 3, part 1, schedule 2. Permits his name or the name of his firm to be used in connection with an estimate of earning contingent upon future transaction in a manner which may lead to believe that he vouches for the accuracy of the forecast. So here you are allowing your name or your firm's name to be used for forecasting of earning, which may lead others to believe that you are vouching for the accuracy. You have to ensure that it doesn't give a wrong impression that you are vouching for accuracy of the forecast, because a lot of people will take decision on the basis of the earnings forecast. You have to make your statement very clear that you are not vouching for the accuracy of the forecast, but if you don't do that, it will amount to professional misconduct under clause 3, part 1 of schedule 2. Financial forecasts are required in prospectus, in case of bank statements, bank loan. Therefore, if you allow your name to be used in financial forecasting, which gives an impression that you are certifying accuracy, it is professional misconduct. And clause 4 expresses his opinion on the financial statement of any business or enterprise in which he or his firm or a partner of his firm has substantial interest. So now here there is a conflict of duty, conflict of interest. You are giving opinion on the financial statement of an enterprise in which either you or your partner has got substantial interest. This is also professional misconduct under clause 4, part 1, schedule 2. because then in that case what you should do, you should not engage yourself in such work, you should withdraw from such work, as there is conflict of interest involved. Clause number 5, fails to disclose a material fact, fails to disclose a material fact known to him which is not disclosed in a financial statement. Now see, this is dealing with financial statement, you please mark it as very important. While solving questions in our current chapter, they will give you questions on financial statement, and then you have to identify which clause is violated or which clause of schedule 2 is applicable. So he is not disclosing a material fact. A company has taken asset on lease, okay, and they are not disclosing it as a leased asset, ROU asset and lease liability. Auditor knew it, but he failed to disclose, then it is professional misconduct, but disclosure of which is necessary in making such financial statement where he is concerned with that financial statement in a professional capacity. So example, leases not disclosed, leases not disclosed, okay. Loan disclosed as cash equivalent, oh my god, loan disclosed as cash equivalent. So this is a material fact which is known to him, but it was not disclosed in the financial statement. Loan given to, for example, director, and they are hiding it under the head cash equivalent, because they are saying we can recover the amount from director any time, but it is not the correct presentation. So this is a material fact which is known to him, which should have been disclosed, but it was not disclosed, hence it is a misconduct, and I am going to take question on this after some time. Clause number 6, fails to report a material misstatement known to him to appear in the financial statement, again underline, material misstatement known to him to appear in the financial statement with which he is concerned in a professional capacity. Material misstatement is known to him, for example, sale of PPE, it is appearing in cash flow from operating activity, it is a material misstatement. Why? Because sale of PPE should come under which activity? Should come under investment activity, but where they are showing? Operating activity, because they want to increase the cash flow from operating activity. If you show higher cash flow from operating activity, it shows a better performance of the company. The auditor knew that it is a cash flow from investing activity, but he did not qualify the audit report. He failed to report a material misstatement, and therefore he is guilty of professional misconduct under clause 6 part 1 schedule 2. So this also you please mark important, because it is dealing with financial statement and we are going to get questions on this. Clause 5, material misstatement, is it right? And he has not reported. Here he has failed to disclose a material fact. Then clause number 7, does not exercise due diligence or is grossly negligent in the conduct of his professional duties. Tick mark, grossly negligent in the conduct of his professional duties, or it doesn't exercise due diligence. You are a professional, you have to ensure that financial statements are prepared as per applicable Ind AS, as per applicable laws, and you as a professional, you should be updated with the latest financial reporting standard laws. If you don't do it, and if the management makes a wrong accounting, you are guilty of not following due diligence, or you are failing to conduct your duties in a professional manner. That is clause number 7. For example, company has PPE and it has a decommissioning obligation. Is it right? Then what you should do? You should calculate present value of decommissioning obligation and you should capitalize it. This much knowledge you should have as a professional, that decommissioning obligation are capitalized over PPE but not done. So you are not exercising due diligence. Is it right? At the end of the year, provision should be made for employee benefits. You should check at the end of the year that all necessary provision relating to employee benefits have been made. This much you can do, but the company has not made provision and you have also not reported that. That is also called negligence in conducting the professional duty or not exercising proper due diligence. Professional misconduct. Clause number 8 also tick mark. This will be useful for our current chapter. Fails to obtain sufficient information which is necessary for expression of an opinion, or its exceptions are sufficiently material to negate the expression of an opinion. As an auditor, you have studied that you should obtain sufficient information so that you can form an opinion, and if that information is not available, then you are not in a position to make the opinion on the financial statement. But what you have done, you have neglected that. You did not ask for sufficient information, and in spite of that you have expressed an opinion. How can you do that? Okay, and that is called professional misconduct under clause A. You have failed to obtain information so as to form an opinion, or the information is not sufficient to express an opinion. Clause number 9. Fails to invite attention to any material departure from generally accepted procedure of audit applicable to the circumstances. Again, one more thing, there is a departure from generally accepted audit procedure applicable to the given circumstance, but you have failed to invite attention, failed to report that. Again, misconduct. But there is no question on this in our financial reporting. You have studied so many auditing standards. There are standard procedure given to conduct an audit. If that is not followed, you need to report it, but you have failed to invite that. And point number 10, part 1, schedule 2, clause 10, fails to keep monies of his client other than fees or remuneration, or money meant to be expended. Client has given you money, it is other than your fees, it is other than remuneration. It should have been used for the client by keeping it in a separate bank account, or to use such money for purpose for which they are intended within a reasonable time. So either you have mixed your client money with your money, or you have not used it within a reasonable time as it was supposed to be used. So that is your mismanagement of the funds of the client. Client's money is not properly you can say used by the auditor or the accountant, then it is a guilty of professional misconduct. So these are the 10 clauses in part 1. Now come to clause 1, part 2. This is for professional misconduct in relation to member of the institute generally. Part 1 is for members in practice. Part 2 is for members of the institute generally, and we have 4 clauses here. So we are in the second schedule, part 2, clause 1. Contravenes any of the provision of this act or the regulation made thereunder or any guidance issued by the council. Write down important. The institute has given some guideline which is printed below. The council of the institute has given guideline and you are not following the provisions of the Chartered Accountancy Act or the regulation made under, okay, or any guideline issued by the institute. You are violating the Chartered Accountancy Act, you are violating the regulation of CA Act, or you are not observing the guideline of the council. You will be guilty of professional misconduct, okay, under clause 1 part 2. So what are these guidelines? It is printed below. I will come back to that in a while. Clause number 2. Being an employee of any company, firm or person. So you, after becoming chartered accountant, you will become employee. Not everybody will go into practice. Most of the students nowadays, they take employment in a company or a firm or a person. Then he gets lot of information about that company, that firm or that person, and he discloses confidential information acquired in the course of his employment. You will get to know lot of information like income of the firm, audit process of the firm, technology of the firm, the software used by the firm, okay, and the documentation of the firm. All this you learn or you get to know when you are employed. You have lot of data of the client also, except, and you are disclosing it. You can disclose it only if required by the law, okay, or permitted by the employer. Without the permission of the employer or if not required by the law, if you disclose information which you obtain during the course of your employment with a company, firm or person, you are guilty of professional misconduct. So this is not a professional behavior. You get to know lot of information, okay. Don't disclose it to outsiders, okay. Don't disclose it to your family members also, okay. Don't disclose their profit figure or whatever financial figures are there. Clause number 3 includes in any information, statement, return or form to be submitted to the institute, council or committee or director discipline or board of discipline or disciplinary committee, quality review board or the appellate authority, any particulars. In short, you are providing information to these bodies, these committees, knowing that they are false, knowing that you are giving a wrong information, still you include in that information. It is a clause 3 part 2 schedule 2 professional misconduct. You are a professional, you are expected to be honest, and what you are doing here, you are giving false information, knowing that they are false, knowing them they are false. So of course it is a professional misconduct. It will bring disrepute to the organization of our institute. And clause number 4, very interesting, defalcates or embezzles money received in his professional capacity. So you have embezzled, fraud committed, you have taken the money, okay, by wrongful means, professional misconduct. And last part 3 of schedule 2 is other misconduct. This is called other misconduct in relation to member of the institute in general. So first part was chartered accountants in practice, second part was professional misconduct for members in general, and part 3 other misconduct for all the members of the institute in general, okay. There is one clause, clause 1, a member of the institute, whether in practice or not, will be guilty of other misconduct if held guilty by any civil or criminal court, or criminal court for an offence which is punishable with imprisonment for a term exceeding 6 months. So, other misconduct would include if you have done any civil or criminal crime and for which you are punished by a court for a period exceeding 6 months, it is other misconduct. So, these are the clause 2, these are schedule 2. Under schedule 2 we have part 1, part 2, part 3. Under part 1 we have 10 clauses, part 2 we have 4 clauses, part 3 we have 1 clauses. This part 1 and part 2 deals with professional misconduct. Part 3 deals with other misconduct. Part 1 is applicable for members in practice, and part 2 and 3 are for members in general, everybody. Enjoy, right now you are not member, right now you are a student, but we are members, so we will have to follow all these clauses. Now, institute has given guideline which we have seen in clause 1 of part 2. Clause 1, part 2, schedule 2. The members are expected to follow the act, regulation or guideline issued by the council. So, what is the guideline issued by the council? Council guideline for conduct of a member being an employee. The council guidelines in appendix 34 of CA Act 1949 states that a member of the institute, there are so many questions in our book based on this particular point. So, I will have to quote again and again clause 1 part 1, clause 1 part 2 schedule 2. Member of the institute who is an employee shall exercise due diligence. Due diligence means you have to ensure that whatever process, accounting principle, internal control that should have been followed has been followed or not. All laws are followed, all Ind AS are followed, all accounting standards are followed, and shall not be grossly negligent in the conduct of his duty. So, there are 2 points written here. He should exercise due diligence, he should not be grossly negligent in performance of his duties. So, if company suppose does not make provision and you are the employee of that company and you ignore this, then you are you are guilty of professional misconduct under clause 1. You should report to the seniors, you should report to the institute or the council, or you should take legal action, or you can even think of resignation if it results into violation of this principle of due diligence and professional conduct. Okay. Now, something very important, tick mark. Following part of code of ethics shall be dealt in financial reporting, underline. So, our subject is financial reporting, not auditing. Financial reporting, code of ethics dealing with financial reporting is, we have to comply with the code, we have to comply with the fundamental principles, and we have to comply with the conceptual framework. As a chartered accountant, we have to comply with the code, the fundamental principle and the conceptual framework applicable to all chartered accountants and chartered accountants in service. So first part 1, complying with the code, fundamental principles and conceptual framework. Okay, first is compliance with the code. All chartered accountants and chartered accountant in service, they have to comply with the code, fundamental principle and conceptual framework. Code of ethics you have understood. You are chartered accountant, you have lot of responsibility. So you have to think again whether you want to become CA or not, because the moment you become CA and you become member, you will have lot of responsibility on your shoulders, okay? Because people will have a certain degree of expectation from you. So your act, your conduct should be in public interest. You will not do anything which is against the interest of the public. You will not do misreporting. You will not try to hide information which should have been disclosed in the financial statement. You will not commit fraud. Okay, you will exercise due diligence. So lot of responsibilities there on the shoulders of the chartered accountants. The code of ethics will help them to fulfill his responsibility. Accountant should comply with the code. Once you become member of the institute, you have to comply with the code, but if the laws or regulations prevent them from doing so, they should follow the laws and regulation instead. If there is a conflict between code and the law, if there is a conflict between code and the law, what you will follow? Law of the land or code of ethics? You will follow law of the land. Professional behavior requires compliance with laws and regulation. If there is a contradiction in the code of ethics or law will be followed. The accountant should be aware about the local regulations. All regulations like income tax, GST, Companies Act, SEBI, FEMA, SURFACI, this you have to be aware of and follow the stricter provisions of the law unless prohibited by law or the regulations. So it is very important that as an accountant, chartered accountant, you have to be aware about the law and follow whatever stricter provisions are there. Of course, if the law prohibits you to apply those stricter provisions, you may not follow. So that is about code. Now very important tick mark, very important, fundamental principles. There are 5 fundamental principles of ethics. How many? 5 for the chartered accountant. One is integrity. Integrity means to be straightforward. Integrity is very important in case of professional. You may not have other 4, but one thing must be there. As a professional, nobody should have even an inch of doubt on your integrity. If you have integrity, you will command respect of everybody. The moment you lose integrity in your work, then you will completely lose all the respects that you have. In fact, you will make our institute also shameful if a chartered accountant does not have integrity. So integrity means being honest to the core. You should be honest from inside. Come what may, you will remain honest to your work. You will remain straightforward, whether it is business, professional relationship. So that is integrity. Okay. If you know that something is wrong, then you will take the stand accordingly. Okay. You can straightforward tell your employer that, sorry sir, I will not do it. This is against my principles to sign a report, a document which I feel it is not correct. Okay. You have to be straightforward. You will get lot of pressure from your seniors. You might have felt in your offices also that you have found some problem in auditing area, but your senior or your manager or your boss may say, you don't worry, we will handle it. And if you allow them to handle, that means you are compromising with your integrity. You should be straightforward and honest. I believe personally, this is the most important feature of a very good professional. If you want to be a very good professional, there must be integrity. Okay. Secondly, objectivity. Don't be biased. Don't be influenced. Look at the situation objectively. Even though you might have pressure from others, but you will have to report what is objectively to be reported, not to compromise with professional or business judgment. You will have lot of pressure in your organization once you join the companies. CFO would say, don't worry, you under-report this expense, or you don't make provision, you treat sale of fixed asset as cash flow from operating activity, okay, etc. Don't show leases, otherwise unnecessary my debt equity ratio will change. And if you do that, you are not observing objectivity. So objectivity means there is no bias, there is no conflict of interest, there is no undue influence of others. If you are biased, if there is a conflict of interest, you are auditing a company where your relative is also holding significant stake. You are auditing a company which has given contract to your brother. You may not remain objective. Better you withdraw from that kind of engagement. Or your seniors, bosses, employer may put pressure on you to treat certain transaction in certain manner. And if you follow what they are saying, then you are not objective. So you are violating the fundamental principle of ethics. Third is PCDC. What is PCDC? Professional competence and due care. You have to be professionally competent when you take an assignment, and you must apply all due care, due diligence in executing the task assigned. Okay, if you are not expert in GST, then you should not take assignment relating to GST. As a professional of a particular area, you must get all the information, you must acquire information, update yourself, learn that skill that is required to execute that kind of task. Otherwise, you should not take that kind of task only. So, attain and maintain professional knowledge and skill at the level required to ensure that a client or employing organization receives competent professional service based on current technical and professional standard and relevant legislation. So, when you are accepting any client or when you are accepting a job, then you must ensure that you have all the necessary professional skill, technical knowledge, you are aware about the regulation, and then you accept that kind of assignment or that kind of job. Then we will say you have observed professional competency and due care. And then once you accept the assignment, you will act diligently, apply due diligence in executing your task based on whatever applicable technical and professional standard. So that is my professional competence and due care. That is my third fundamental principle. Is it right? Suppose you ask me, sir, you teach auditing. I have already told you at the introduction part of this chapter that auditing is not my area of competence. I have never taught that subject fully. Is it right? Long back, about 20 years ago, only one batch I have taken, and that too for intermediate. For final I have never taken. But you say, no sir, I will pay you fees, you teach auditing, you teach GST, you teach direct tax, and if I don't have professional competence to execute that, I am not following the basic fundamental principle of ethics. Either first I should learn auditing or GST or direct tax by going through all the available literature, etc., and then I should come and say yes, I should teach. Otherwise, I am not following professional competence and due care. Is it right? And the next is confidentiality. You want to be professional. When you are rendering professional services, you get to know lot of information about either the client or the employer. You get to see their financial data. You get to see their processes, the technology they are using, the business strategies they are using, okay, how they are raising the funds, how they are managing internal controls, their employees. You get to know the data set of their customers, suppliers and other vendors. What are you supposed to do? Are you supposed to go and disclose to other people? The answer is no. The answer is no. Now the student is saying, sir, earlier you have written a book on audit. You are right. I had written a book on audit, but I said I do not teach audit. Writing a book is a different skill. Teaching in the class in front of student is a different skill. So therefore, writing a book or compiling a book is a different set that I had done. But then if you ask me to teach, when you teach, you are on real time basis. You don't have time to do analysis, references. But when I write a book, I sit with 10-20 different books. I read them. I collect information from different sources. I compile them. Okay. But when I have to teach, I am online right now. Between you and me, there is just a presentation and I have to continuously talk to you. Your queries will have to be answered on real time basis. So that is the difference. Plus I have to keep you engaged also. I have to keep you motivated for 3 hours. That was a good question. Confidentiality. I have written books on motivation also. But if you ask me to give a motivating lecture, maybe you will go into sleep mode. Next point, confidentiality I have explained. You have worked in so many offices during your articleship also. You get to know lot of professional and business information about the client. Keep it with you. Don't tell your friend also. Don't tell your parents also, brother, sister also, and that other person also, your favorite. I won't take his or her name. You have understood. Point number E. The last fundamental principle of ethics is professional behavior. That is, you have to comply with relevant laws and regulation and avoid any conduct that the chartered accountant knows or should know might discredit the profession. So professional behavior means follow the law. Do not do anything which will bring discredit to our profession. Is it right? Yesterday I had given the example also that suppose you are misbehaving with the female employee, just for example, how does it affect other members of the society? They will say, what kind of CA you are? They will not take your name. They will simply take the name of the profession. This chartered accountant was found misbehaving. Or if you have committed a fraud, the newspaper headline says, chartered accountant caught committing fraud. Chartered accountant sentenced to jail. They don't write the name. They write the chartered accountant. And then everybody comes and asks me, sir, what happened? This CA has gone into jail for bank fraud. So he is not following the fundamental principle. A chartered accountant should comply with each of the above 5 fundamental principles. So let us revise what are these 5 fundamental principles: integrity, objective, professional care and professional competency and due care, confidentiality and professional behavior. Every chartered accountant has to follow these 5 fundamental principles. A CA may face a situation in which complying with one fundamental principle conflicts with complying with one or more other fundamental principle. So sometimes there can be a conflict between fundamental principles only. Okay. In such situation, what will you do? Consult with others within the firm or the employing organization. Because if you find something is going wrong, you have to go and talk to somebody else. If I find that something is going wrong in the organization, I have to talk to someone else. But then I would be violating my confidentiality. I am sharing the information I found with others. So if I observe confidentiality, I am compromising with integrity. If I am following integrity, I may have to compromise with confidentiality in certain cases. What are you supposed to do? If you are working in the organization, then consult with other members in the firm or employing organization, or you can go to those who are charged with governance. Basically, those who are charged with governance, it can be a board, it can be CXO level officers who are running the show, or you can even write to the institute, or if required you can take legal counsel also. However, such consultation does not relieve the accountant from the responsibility to exercise professional judgment or to resolve the conflict if necessary, and unless prohibited by law or regulation, disassociate from matter creating the conflict. And this line says, in case if you find that there is a conflict, then in that case, to avoid the conflict, you may decide to disassociate from that matter. You may disassociate from that engagement. If you are an employee, you may decide to resign from that organization, or you may decide to disassociate from that assignment. That is, you have to ensure that if there is a conflict, then these are the steps you have to take, and you can even disassociate from the assignment. Now we are going to discuss briefly this 5 fundamental principles. As I always believe, out of the 5, integrity is the most important one. Chartered accountant must comply with the principle of integrity, which means being honest and straightforward in professional and business relationship. So you should be honest and straightforward. Okay, you should not try to please others. You have to say what is yes and what is no is no. What is right, what is wrong is wrong. He should not be involved with reports, returns or other information that they know contain materially false or misleading statement. Either you are not involved with this false statement, or if they are false statement, misleading statement, you must report that they are false or misleading statement. You must qualify the audit report. You should not think about losing the assignment. What is right, and what is wrong is wrong. Do what is right, not what is convenient. That is integrity. And if you find it is wrong, misleading, then you should report accordingly. He should not provide statements or information negligently. A professional has to be very careful about what he speaks because it will have an impact on the others. Therefore, he should not make statements or provide information which are provided negligently without verifying the truth. Is it right? I can't say to you that our CA exams have got 85% passing percentage and that will bring lot of people in the CA course, and after foundation and intermediate they will realize, oh, this passing percentage is not 85, this is only 15 to 20. Sir has given exactly opposite statement. That means my behavior was not proper as a professional. I have to keep in mind that our statements are very important for outsiders. Then you should not omit or obscure information if it would be misleading. Omit means not to give the information. If he finds that company has not made provision and he has not reported that, he is not acting properly, it is not an integrity or behavior of integrity, or if he hides information, obscures means hiding information, sale of PPE is shown as cash flow from operating activity. So you have tried to hide that information, but these are two different things. They have different purpose. Investor would look at them differently for analyzing the performance and for taking investment decision. If you do that, you are not properly following the principle of integrity. But if the company does this and if you report it, you are following principle of integrity. So that is about integrity. Trust me, if you want to become a good professional, the first lesson today you will carry, not for the exam only, but for the rest of your life, you should have integrity. You should be honest, straightforward. What is right, what is wrong is wrong. You will do what is right, not what is convenient. Okay, so that is my message for you. Next is objectivity. Objectivity simply means no biasness involved. Information should be provided without being biased, without being influenced, without having conflict of interest. Then it is called you are following principle of objectivity. Not to compromise professional or business judgment because of biasness. If there is biasness, you can't be objective. Okay, if somebody, some relative of yours is having a stake in the company and you know that if the profits are higher, market price would be higher, probably you will not be objective. You would try to influence the financial figures and raise the profitability. Then you are biased. If you are biased, then you are not objective. Then you are not a good professional. Then there should not be conflict of interest. Okay, if you are auditing a company and at the same time that company has given a contract to your brother, you know that if you are going to report something negative about the company, your brother or family member might lose the contract. Then you will not act objectively. So in conflict of interest situation, you should withdraw from the assignment. You should disassociate with that assignment. And third, which you are going to face in your life, once you qualify, your boss will come, okay, to you and say that Rahul, pass this entry, don't pass that entry. Okay, why are you taking 15% discount rate for valuing this company. You will say, sir, I think it is a very risky company. Future cash flows are uncertain, so I have taken higher risk premium. This is what Rahul is saying. The boss knows that if you use 15% discount rate for valuation, the value will go down. Then the boss will say, Rahul, you take 9% only. Don't worry. We will tell the investor, we will tell them some story. We will say that yes, we are very confident about future cash flow and do the valuation at 9%. What will Rahul do? What will Rahul do? Rahul is now have a problem. If he does say yes, I will do it, then he is not acting objectively. If he says no, I will not do it, then he might lose the job, he might lose the promotion, he might lose the bonus. So Rahul would go and first report to the higher authorities, go to those who are in charge of governance, look for legal remedies, and if nothing works out, then maybe he can disassociate from this assignment or he may even quit the job. So that is where he will act objectively. This kind of pressure will come to you either as an article student, after you qualify, you join a firm or a corporate, then this kind of pressure will come and this chapter will guide you that you have to act objectively. Now your dear institute has given one case study. First of all case studies are important. There are I think 10 case studies given in this booklet or in the institute material. Total 10 case studies are there. This will give you a very good idea as to what kind of questions they are going to test you. These questions are a mixture of knowledge of financial reporting plus professional ethics. Under professional ethics also you have to only refer second schedule. So all questions will be mixed of this, and plus you have to also ensure that you follow the professional behavior or the fundamental principles of ethics. You follow fundamental principles of ethics. With this combination, fundamental principles of ethics, financial reporting, and second schedule of code of conduct, code of ethics will help you to answer these questions. When you will write the answer, you will divide into three parts. First is from financial reporting point of view. They will give you some transaction which will be wrong, mostly wrong, and then you have to go and check which standard is not properly followed. Then you have to see fundamental principle which is violated. There are 5 fundamental principles. You have to check which of them, one or more. It can be only objectivity, it can be objectivity and integrity, or it can be objectivity, integrity, confidentiality, PC/DC, and professional behavior. And then you have to also refer code of ethics, the relevant clause, relevant part of relevant schedule you have to quote. Okay, that way you will answer questions on this topic. So there is some knowledge of financial reporting also required. Lot of auditing teachers are teaching this topic. Okay, that itself is not following fundamental principle, because an auditing teacher, a pure auditing teacher, does not have professional competency to teach this topic, because it will require a very strong understanding of financial reporting subject. Okay. Let us read question number 1. InfoStar Limited is a listed company engaged in the provision of IT services in India. The directors are, now this is the important line, are paid a bonus based on profit achieved by the company during the year as per the bonus table given below. So now you can understand what the directors will be interested in, whether they want to show more profit or less profit. More profit, more profit, more bonus. So in order to show more profit, the directors may like to manipulate the accounts also. Let us see their bonus. Profit is less than 1 crore, 0 bonus. 1 to 5, 2% of PAT. 5 to 10, 4%, 10 to 20, 6%, 20 to 30, 8%, 30 and above, 10%. So you can see, more the profit, more the bonus. The draft statement of P&L account for year ended 31st March 2002 currently shows a profit of rupees 2 crore. Oh my God. If the profit is only 2 crore, they will get 2% of 2 crore as bonus. How much is that? Anybody who would like to reply? 4 lakh only. Oh, such a lower amount. Even a fresher CA will earn so much bonus, okay, in a year. If you work in some big 4 firm, you can get this much bonus in first year only. And here we are talking about these directors. On 25th March 2002, InfoStar Limited sold land located adjacent to its head office to a third party just limited for a consideration of 40 crore. So on 25th March, they have sold one land to another party for 40 crore with an option to purchase the land back on 25th May. They will repurchase it on 25th May 2000X2 for 40 crore plus a premium of 6%. So sold for 40 crore and will repurchase at 40 crore plus 6%. So this is sale and repurchase. Ind AS 115 will become applicable. Ind AS 115 deals with sale and repurchase, and they are saying that if you sold it and you have an option to repurchase, what is this 6%? This 6% is nothing but interest. So this is a financing arrangement. This is not sale transaction, because the control is not transferred to the buyer. You are going to purchase the land again, okay, therefore it should not be recorded as sale. You should simply keep land in your book as it is, okay. You should keep the land in your book as it is, and the amount received 40 crore will be shown as loan. When you repay the loan next year, you will show that 6% additional amount paid as interest cost. The amount received from transaction eliminated the bank overdraft of InfoStar Limited on 31st March 2002. So you received the money, your bank overdraft was eliminated. Now see what they have done. On instruction of the CFO, who is a CFO? Who is a chartered accountant. CFO is a chartered accountant. The transaction was treated as sale. including the profit arising on disposal in the statement of profit and loss for the year ended 31st March 2002. This chartered accountant, who is a CFO, have treated this transaction as sale. Required, discuss the ethical and accounting implication of the above issues with respect to chartered accountant in service, referring to the relevant Ind AS wherever appropriate. So first of all, in the exam, what are you supposed to do? You have to first talk about the financial reporting part. Is it right? What is the financial reporting part? That this is not a sale transaction. This is sale and repurchase transaction. Asset should not be derecognized. Asset should not be derecognized. Why it is not a sale? Control is not transferred. Loan rupees 40 crore will be shown. No profit will be shown because there is no sale. No profit will be shown in P&L account. This is my financial reporting answer. Ind AS 115 says that when there is a sale of an asset with an option to repurchase, okay, then we will treat as loan arrangement. I am not going into more details of Ind AS 115, there are certain conditions also, but in general such transactions are financing arrangement, and therefore the extra amount paid 6% will be shown as interest. So that is the financial reporting angle. Then you have to principles of, or you can say principles of ethics, fundamental principle of ethics. Have they followed 5 fundamental principles of ethics? The 5 fundamental principles of ethics is integrity, objective, professional competence and due care, confidentiality and professional behavior. Integrity is not there because the CFO is not honest. Objectivity is not there because his treatment is biased. If he shows profit, then he will get more bonus. Then of course he has not exercised professional competence and due care. He should have the knowledge of Ind AS 115 and he should have not shown it as a sale. Confidentiality, I will not say anything, but professional behavior is also not there. As a professional behavior, you should have reported the transaction in their correct form, but you are trying to manipulate. Is it a professional behavior to manipulate the account? The answer is no. So second thing, you will talk about fundamental principle of ethics, where integrity, objectivity, professional competence and due care and professional behavior is not there. And then you will talk about code of ethics. You will talk about code of ethics. So code of ethics, schedule 2. Under schedule 2, part 2, clause 1, you have acted negligently, you have not exercised due diligence, you are guilty of gross negligence in the discharge of your professional duties. So that reference you will write while writing the answer. So three things you have to write in your answer. First part, you will write what accounting treatment they have done and whether it is in line with the respective Ind AS. Second, you will talk about ethical issues, which ethical issues, which fundamental principle of ethics they have not followed. This is simply a window dressing exercise. And then you will also talk about Chartered Accountant Act 1949, which schedule, which part and which clause they have not followed, and you will briefly explain that clause also. A member of the institute who is an employee shall exercise due diligence and shall not be grossly negligent in the conduct of his duties. That is clause 1, part 2, second schedule. Is it right? Is it right? Say yes. Very good. Now we'll come to point number 5. Our topic right now is fundamental principles of ethics. This is our broad topic. Under that there are 5 principles. Integrity done, discussed. Objectivity discussed. Now professional competence and due care. So this is the current discussion, point number 5. Today as a homework you will read the answer and make a summary of the answer. One day before the exam you can't read so much. So on your own, you are a final student. I do not believe in spoon feeding continuously. Okay, answer is there. Make your own summary. You will remember it for a longer time and you can do it. You can do it. Trust yourself that you can do it. And I am telling you, in the exam you may not get any of these 10. Yes, in the exam you may get a different case study. That time we will not be there as a teacher. That time the student will have to write his own answer. It is better you start practicing now. If possible, write the summary and mail to me. Okay, if possible, write the summary and mail to me. If I find your answer is good, then in the next edition of the book I will put your summary answer in our notes. You can even write in the notebook. Take a photo and mail to me. My mail ID, where I will check every day, vinod_ca@yahoo.com. This will involve you also in our discussion. Agreed? How many of you agree to make a summary of answer 1? Very good. So next point is professional competence and due care. Professional competence requires, tomorrow you will also become chartered accountant and then you will take a practice or you will take a job. Then what do you mean by professional competence there? You have to be updated with technical, professional and business development. Whatever field you choose as a practice or as an employment, you have to be competent in that area. You have to be technically updated. Whatever technology is required, whatever technical standards are there, whatever legal updates are required, whatever knowledge about business are required, you have to continuously update. That is why our institute conducts lot of courses to keep you updated also, and you can also participate in those seminars, conferences that will keep you professionally competent. Second is, this is what I was saying, continuing professional development. Post qualification, the institute conducts a lot of programs where you can update yourself. There are seminars on audits, there are seminars on direct tax, GST, or financial reporting or valuation. You have to participate in those seminars, conferences, and you keep yourself updated. This will keep you competent, capable to perform your duties. Unfortunately, practically, I have found there are a lot of professionals who are not updated with the latest technology, with the latest regulations, or with the latest standards, etc. Some of the professionals, they still ask me, what is the difference between AS and Ind AS? Some professionals still ask me, does AS exist or has it been eliminated after Ind AS? And those people are into practice. OMG. Some professionals do not know how to compute deferred tax. I am telling from my experiences, those who are actually into practice. Some professionals may not know how to do consolidation, and they have taken assignment of consolidation. That is not professional competence and due care. Then what do you mean by diligence? Diligence means acting carefully, thoroughly, and promptly in fulfilling the assignment. Do everything which is required as a good professional to complete your assignment. Have a 360-degree view. Look at the transactions or the assignment from various angles, from the point of view of financial reporting, from legal point of view, from tax point of view, and then you perform your duties. That is due diligence. Whatever information are required to complete, you must gather those information and then you must discharge your duty. That is professional competence. That is called diligence. Okay. Just like suppose a father has to find a bridegroom for his daughter, what he does? If a father has to find a bridegroom for his daughter, what they will do? They will try to get minimum information or maximum information. Maximum, very good. That is what is diligence or due diligence in real sense. They will first get the basic biodata, that horoscope or whatever you call it. Then they will make lot of inquiries from people who are in the market, from their relative. Then they will visit the house just to check whether whatever they are saying is right or not. And after months of due diligence, then they finally conclude, is it right? Same thing should be done by a professional also. Same thing means not finding a bride or a groom, but when you are doing your duty, then you must take all efforts to do it in the best possible manner. That is diligence, which I will say that you must do your homework properly when you take an assignment and execute it to the best of your ability. Accountants should ensure that their team members receive appropriate training and supervision. You can't do everything. So normally a CA has got assistants, articles. Those should be also trained, supervised. Okay. And those assistants should also meet professional competence and due care standard. Work of the staff, articles should be supervised, should be ensured that they are also conducted as per professional competence and due care, because ultimately you are going to sign the report. Nobody is going to ask your employee or the staff or the article what they have done. They are going to ask you what you have done. So you are also responsible for your employees' work. Hence, they should be also competent. They should also be trained. They should also be explained about the whole process and everything. And nowadays that companies are conducting lot of in-house training, in-house conferences, so that their employees are also updated about latest technology or the standards or the tax provision or the legal provisions. Again one case study will come. Question number 2. Rustam Limited, a company engaged in oil extraction, has a present obligation to dismantle the oil rig installed by it at the end of the useful life of 10 years. Rustam. So this you will remember Ind AS 16, Ind AS 37. You have a present obligation to dismantle the rig, and therefore you will make a provision for decommissioning liability. Rustam cannot cancel this obligation or transfer it. Rustam intends to carry out the dismantling work itself and estimate the cost of the work to be 100 crore after 10 years. This is learnt in Ind AS 16 and Ind AS 37. Directors of Rustam are aware of the requirement of Ind AS 37 read with Ind AS 16. However, they propose to expense the cost of dismantling the oil rig as and when incurred. Now, what is their suggestion? They propose to expense the cost of dismantling the oil rig as and when incurred, with no entries or disclosure in the latest financial statement. My question is whether the directors are correct in suggesting that we should not make a provision and we will treat it as an expense after 10 years when actual expense of dismantling will be incurred. The answer is no. You are right. They argue that application of Ind AS involves judgment, and although prudence is mentioned in the conceptual framework, it is only one among the many ways of achieving faithful representation. So directors are saying making estimate is very difficult. It requires lot of judgment. Even though prudence is mentioned in the conceptual framework, but that is one of the so many things that are required for faithful representation required. Whether the directors are acting unethically in the above instance? What should be the practicing chartered accountant's course of action in this regard? Very easy question. So again you have to analyze from the point of view of financial reporting. Then fundamental principle of ethics and code of conduct or code of ethics, whatever. I can explain this part right now immediately as per Ind AS 16 read with Ind AS 37. If you have a decommissioning obligation, then you are going to compute the present value of decommissioning obligation and account for it today. Okay, entry to be passed is PPE account debit to provision for decommissioning liability. PP balance will increase. You are going to depreciate it every year. Provision for decommissioning liability, you will provide for finance cost every year for 10 years. That is the correct treatment. since you are able to estimate the cost 100 crore, now the only task remains is you have to find the present value. That should not be very difficult. Therefore, management's view that if we ignore this and record the expense when the cost will be incurred is not correct. Is not correct. It is against the principles given in Ind AS. Okay. It is also against the principle given in conceptual framework. Hence, companies should have made provision for dismantling cost and accounted for it. If they don't do it, then the financial statements are not Ind AS compliant. The directors must also know that if you do not comply with the financial statement, you have to explain in the director's report that why certain standards are not complied with and what are the financial implications. Departure from standards are not allowed, only in rare circumstances it is allowed with disclosures. Is it right? Therefore, directors are not right. Financial statements will not present true and fair view. Now, coming to the fundamental principles of ethics, again you will write that integrity is not there. You are not reflecting the honest presentation. Objectivity is not there. You are biased. You don't want to increase liability in the books. Okay. Professional competence is completely gone into Indian Ocean. It is very clearly mentioned that you have to make provision for dismantling cost and you are not doing it. Where is professional competency? And it is against professional behavior also. Giving wrong financial statement in the hands of stakeholder is against professional behavior. The public in general, shareholders will be misled. And on top of that, if you say that your financial statements are Ind AS compliant, that is again wrong. So that is my violation of fundamental principle of ethics. And then what are the code of ethics? You are the suppose practicing chartered accountant, okay, and you have to sign this audit report. Then you will have to qualify it. You will have to qualify it, and if you don't qualify, then you will be guilty under clause 5, clause 6 and clause 7 of part 1 of schedule 2. Sir, what is clause 5, clause 6, clause 7? Let us see what are clause 5, clause 6 and clause 7. It is written in the last 3 or 4 paragraphs. Clause 5 states that a chartered accountant is guilty of professional misconduct when he fails to disclose a material fact known to him. You know that company has not made provision and you fail to disclose it, which is not disclosed in the financial statement, but disclosure of which is necessary in making such financial statement where he is concerned with that financial statement in a professional capacity. So you have not disclosed certain information which is material. That is one violation of professional code. Second, clause 6. CA is guilty of professional misconduct when he fails to report a material misstatement known to him to appear in the financial statement with which he is concerned in a professional capacity. And then he is violating clause 7 also. Tick mark all this. A chartered accountant is guilty of professional misconduct when he does not exercise due diligence or is grossly negligent in the conduct of his professional duties. So because the question is about a chartered accountant in practice, you will apply part 1 of schedule 2, and in part 1 of schedule 2 clause number 5, 6, 7 are violated. Okay, is it right? Is the answer right? So again, homework. First homework is read the answer, and second is make summary for your own benefit. This will give you a writing practice also, and those who want, you can email to me the summary that you have prepared. You can email to me the summary you have prepared. Email ID vinod_ca@yahoo.com. Okay, write down your name. Your name will appear in the email address, chapter name, question number, etc. If suppose you don't have time to type, you can just take a photo of your answer and attach it. That is also okay. Our topic is fundamental principle of ethics. There are 5 fundamental principles of ethics: integrity, objectivity, professional competence and due care, confidentiality and professional behavior. So we are here right now. Another very important fundamental principle of ethics is confidentiality. Especially when you are a chartered accountant, you get to know lot of information about your client, lot of information. Okay, you have to keep it with yourself only. Do not use it for your own self. Do not disclose to other. You can disclose it only with the permission of the client or the employer, or if the law permits you to do that. See, you will be able to see the entire balance sheet of the company, and if it is a listed company, and if you are able to see the balance sheet, P&L account, cash flow statement, notes before it is made public, you have got a lot of information which are price sensitive information, because if the company has made a huge profit and once it is announced, share prices will jump and there can be gain, but you have to keep the information with you. Do not disclose it to anybody else. Second thing, you have to be cautious about accidental disclosure also. Accidental disclosure means don't go to your home and you tell your friends or your brother, sister, parents, see sir, I have seen today the profit of Tata Motors. Suppose you are auditing that company and you'll say Tata Motor this time has made this much profit, this much growth rate. You are just trying to tell them that what you have done. But then your parents and your siblings are smart, your friends are smart. Immediately they will buy the share in the morning tomorrow, before the information is announced by the directors. What you are doing? Indirectly, you are violating confidentiality. Accountant must keep information confidential within the firm or the organization, and that is the test of a true professional. Like in case of medical profession also, we say that you don't have to give any information about your patient to somebody else. Same thing here also. They should protect the confidentiality of information shared by potential client or employers. Otherwise, what happens? The trust in the profession will decrease. If you start sharing the information here and there, the trust will decrease. Accountant should not disclose confidential information. You can disclose only with proper authority or if required by the law. They should not use also. If you are using for your own benefit, that is also a violation of confidentiality, or share confidential information for personal gain or with third parties. So in case if you are auditing especially listed companies, nowadays the firm will make you sign an undertaking that you are not holding any share in this company. Even your family members are not holding share in that company, so that you don't get undue gain from that. But still our people are smart, they will not hold, their family members will not hold, but they will inform their distant relative and friends, and later on they will enjoy the gain. Insider trading is rampant in India. There is no respect for the law or the professionalism. Confidentiality is not observed in true sense in most of the world, part of the world, because that is where you can make some extra bucks. If you are working in companies whose financial results or information can impact the market values, accountant should ensure that their team members and advisors also respect confidentiality. Some companies, what they do not allow personal mobile phones, personal laptops to the employees. They will say you deposit all your personal mobile and laptop, you work on company laptop and company mobile. From there it is not very easy to extract the data and share with others. So you have to use whatever technology is required to maintain the integrity of the data, to maintain the confidentiality of the data. Now there are companies which provide payroll services. That means they are going to provide all the services relating to salaries, wages, PF calculation, gratuity calculation, bonus calculation, everything. This is a huge task, because companies have got thousands of employees, some companies have lakhs of employees. So these services are outsourced to chartered accountants who will do all this work. But then it involves lot of confidentiality, because the person handling payroll services will be able to see who is getting how much salary or how much bonus, etc. And you have to maintain that confidentiality unless required by law. Confidentiality allows free information exchange, but disclosure may be necessary in certain situations like legal requirement or client authorization. You can disclose information only if client authorizes or it is the requirement of the law. Even after the professional relationship ends, suppose you are no longer doing the same audit, that does not mean next year you will take a revenge and give all information in public domain. They should not use or disclose information when changing employment or acquiring new client also. Even if you have changed the employment, even if you are not associated with that previous client, you should not give confidential information to anybody else. Accountants have an ethical duty to report fraud or non-compliance that can harm the shareholders. However, keep in mind, if you find any fraud, if you find any non-compliance when you are auditing a company, now whether you will keep it confidential or whether you will report it to your shareholder. So here you are finding there is a conflict in the fundamental principle of ethics. If you disclose, you are violating confidentiality. If you don't disclose, you are not following integrity. So what we should do? we should disclose, okay, using whatever appropriate policy the firm has. In case of fraud or non-compliances, we have to follow integrity principle and make disclosure, because that is the ethical duty. You are also responsible for the benefit of the stakeholders who are relying on the auditors or the accountant. If required, you can take legal advice to guide the application of confidentiality. Prior experience can be used, but confidential information should be protected. So that was my fourth fundamental principle of ethics, confidentiality. One student is saying lawyers also have got lot of confidential information. Yes, you are right. Lawyers know so many things about you. Okay, all your bad things also he knows, but they should not report. So please revise. What are the 5 fundamental principles of ethics? First one, come on, integrity. Second one, objectivity. Third one, professional competence and due care. Fourth one, confidentiality. And fifth one is professional behavior. So that will complete my fundamental principles of ethics. Professional behavior. You are chartered accountants. You will become chartered accountant very soon. Life will change. Your family members will have a different view about you. They will think that now you are a very responsible person, smart person, very learned person. All your neighborhood people would have a different view about you. Once you pass, you are in a different league. Is it right? And therefore, it brings lot of responsibility. With great power comes great responsibility. Is it right? Being a chartered accountant is not easy for the rest of your life, because anything you do, people will judge you because of your qualification, right? And therefore, professional behavior means whether you are working in the organization or practicing or outside it, you have to behave in such a manner it does not bring disrepute to the profession as such. Hence, you should avoid such tasks which will bring professional misconduct. Should be honest and not make exaggerated claim about their services or qualification. Don't exaggerate about your qualification. Don't make exaggerated claims about your services. You have to be honest, and you have to only take those assignments where you have professional competency. Do not make disparaging or derogatory remarks or unsupported comparisons to others. When you speak also something, be careful. First of all, your language, your communication should be like a professional. You should not speak in language which is derogatory, disrespectful, and also do not make claims which are not supported. Okay, you can't make false claim. That is not a professional behavior. Accountant should follow the advertisement guideline issued by the Institute Council also. So when you are like practicing CAs, you must have studied in your auditing subject. There are advertisement guidelines, because you can't advertise in such a manner that it amounts to soliciting, and you should not go overboard also. You can't hire a female model and write, get the auditing done, get income tax return free. You can't make such kind of advertisements. Okay, you are not selling popcorn or chips or Pepsi and cola. You are a chartered accountant, So even your communication through advertisement has to be as per the guideline, so it does not bring disrespect to the organization. Sanctity of profession is very important, correct? Now that was about confidentiality and professional behavior. This is my part 1. Part 2 is conceptual framework. Conceptual framework are like basic framework which one has to refer every time whenever you need some solution for certain things. Like in financial reporting also, there is a conceptual framework for financial reporting. So whenever we have any doubt as to how a particular transaction event has to be treated, and if we don't get a direct answer in any of the standards, we refer to the conceptual framework for financial reporting. So chartered accountants should not hesitate in referring to conceptual framework to identify, evaluate and address threats to compliance with fundamental principle. 3 words underline. You have to refer conceptual framework to identify, second, evaluate, third, address threats to compliance. How to identify threats to compliance, how to evaluate the threat to compliance, and how to address the threat to compliance with the fundamental principle. Especially if you are auditing a company or if you are an employee in a company, you may get threat to compliance with the fundamental principle. Your boss will say, don't do this. There may be a conflict of interest. You may not be professionally competent to do a task. You will get lot of confidential information. In that case, how to identify what are the threats, how to evaluate and what action you should take in those scenarios. So this chapter is really important for the future chartered accountants. You have to identify threats to compliance. You have to evaluate the threats, that what kind of threat is it, what can be implication, and then finally you have to address the threat by either eliminating it or reducing them to acceptable level. So as I has asked some time before, that Rahul and his boss have difference of opinion about treatment of provision. Rahul says we should make provision, boss says we should not. So this is a threat to compliance with fundamental principle. If you do not make provision, integrity, objectivity, professional behavior are not followed. Then what he should do? Okay, this is what we are going to learn in the coming pages. When applying the conceptual framework, chartered accountant will first exercise professional judgment. How a professional will evaluate and arrive at the necessary action, and second, remain alert for new information and to changes in facts and circumstances, and use the reasonable and informed third party test. Reasonable and informed third party test means look at the whole issue from the point of view of a third party and how the third party would evaluate the situation. Forget that you are facing it. Look at from third party, how a third party would react in this situation. Professional judgment requires or involves using training. What I am doing right now, I am training you. I am providing training to you so that in future when you come across such situation, you can refer what was taught. Then professional judgment involves use of your own knowledge, and third, use of your experience. You might have come across similar situation in the past to make informed judgment. Accountant must apply conceptual framework to determine appropriate action. That means what are you supposed to do when there is a threat to your professional ethics? What will you do? How to resolve it? What are the things you will do? In what sequence you will perform? Don't resign directly. First you can report to seniors or those who are charged with governance or the institute. Take a legal help. If nothing works out, then you can disassociate with that assignment. That is what can be appropriate action if there is a threat to compliance with the fundamental principle of ethics. Understanding facts and circumstances is crucial for applying framework. You have to understand the circumstance, facts, and then you apply your conceptual framework. Accountant needs to consider missing information, inconsistencies, and their own expertise. So all this you will have to take care while taking necessary action when there is a threat. And as I said earlier, do not jump to resignation. Your job is important. So you have to take the help of others and ensure that information is reasonable. Accountant should be aware of the biases and consider alternative conclusions. So you are going to come across this. You are, as a practitioner or as an employee, you are going to face situation when there will be a threat to professional behavior. Okay, but then we have to also learn how to deal with that. There is something called reasonable informed third party test. What does that mean? That means that you think as if you are a third party, you are not involved in the situation, you are an outsider. How will an outsider evaluate the situation and how will an outsider react to that situation? And that will help you to arrive at the necessary action that you should take when there is a threat. So accountant should consider the reasonable and informed third party test. How a reasonable and informed third party is going to view the situation, analyze the situation. It involves imagining how another party would likely reach the same conclusion, how the other party would look at the thing and reach the same conclusion. The test is based on a reasonable and informed perspective, not necessarily from an accountant point of view. That means you have to see if there was a third party who is well informed, who is reasonable, how he would arrive at a conclusion when there is a threat. The third party weighs all the relevant facts and circumstances known to the accountant. The third party possesses the necessary knowledge and experience to impartially evaluate the conclusions. So the summary is that how a third party would react to the situation in which you are right now. Apply that third party test. Think from a third party angle. If he is reasonable and informed, how he will evaluate the situation and arrive at the conclusion, and you can also behave accordingly when there is a threat to applying the fundamental principles of ethics. Okay, so now we'll take a small break. Okay, welcome back. I hope you are enjoying this wonderful topic, professional and ethical duty of a chartered accountant. Now we'll come to part 2, chartered accountants in service. Next page if you see, chartered accountants in service means those who are in employment. Those who are in employment, then for them part 2, okay, part 2 professional conduct in respect of members of institute generally, and part 3 other misconduct in relation to member of the institute generally would apply. Part 2 and part 3 of schedule 2 will apply. Part 2 is for professional misconduct and part 3 is for other misconduct. First point A, conflict of interest. When you are working in the organization as a chartered accountant, there are possibilities of conflict of interest. For example, you are working in A Limited, and A Limited may have transactions with B Limited. A CA who is working in A, his relative may have stake in B Limited. Possible. Relative of CA working in A may have stake in B or may be the owner of B, and therefore this type of situation would give rise to conflict of interest. Company A where CA works, they may enter into certain type of contracts with the relative of the chartered accountant, and that would involve conflict of interest. Whenever there is a conflict of interest, it can compromise your judgment whether you should look into the interest of your company or whether you should look into the interest of your relative. What should you do? So, example of situation which can give rise to conflict of interest. One example is holding management or governance position in two organizations. So, you are part of the management of two organizations and then you have information about both the organization. So, some company may be in the management team of organization A and B. Coincidentally, they may be competitor and therefore you have confidential information about both the companies and you can use it to your advantage and you can benefit one company at the expense of other company. This is one more interesting example. You are assisting both the parties in a partnership dissolution as a professional activity. So, you are acting as a advisor and there are two parties in a partnership who has come to you for dissolution. You are advising both of them. Amazing. And providing financial information for management members who is pursuing a management buyout. A member of the management wants to acquire the company through management buyout process. So, on one hand you are representing the management, on the other hand you are helping the members of the management team in management buyout. This is a conflict between the company and management. Whom you should help? The management member or the entity where the management member is pursuing a buyout, and this is very common. This is very common in business. Being involved in a vendor selection when a family member could financially benefit. Okay, you are going to deal with vendor selection process. One of the vendor who has submitted the quoted is your family member. So, if family member is selected as a vendor, he will be benefited. This is a conflict of interest. And serving in a governance role for an organization, approving investment. So, you are the part of the management of a committee who is approving the investment, and if that investment is made, it will help the accountant or a family member's investment portfolio value also. So, if you take investment decision on behalf of the company, indirectly it may be benefiting the family member or the accountant also, because the value may go up. These are the examples of conflict of interest. Now, next under that we have first point, conflict identification. We have discussed the fundamental principles of ethics. Under that we have ensured that there is no conflict of interest, because conflict of interest means your ability to take objective decision will be affected. So, there is a threat to objectivity here, there is a threat to integrity here. I need to identify what are the conflicts involved. As an employee of the organization, I have to identify whether there are conflict of interest in whatever I am going to do, which will result into conflict of interest. Possible? Yes. How do I identify conflict of interest? Understanding the nature of interest and relationship between involved parties. So, you have to check what are the interest of the company and the other party, and what kind of relationship is there between the entity and the other party. The other party, if he is your family member, or if it is you only, if it is your friend, that means there may be conflict of interest. And second, evaluating the activity and its impact on the relevant parties. So, what activity you are supposed to perform? Like for example, vendor selection. and vendor selection may give quotation or give may preference to your family member. So that is a situation which will create conflict of interest. After you identify conflict of interest situation, what are the threats that will be created by conflict of interest situation? When there is a strong connection between professional activity and conflicting interest, if there is a strong connection between what you are supposed to do and conflicting interest, the threat level is higher. If you are member of a team which has to select a vendor, one of the vendors is your family member, then there is a higher degree of threat that you will not be able to objectively take decision, and therefore it is not considered acceptable. So example of an action that can eliminate threat caused by conflict of interest, what will you do? Once you identify that there is a threat where you cannot exercise objective opinion, objective decision, what will you do? One option is withdraw from the decision making process. You say that I am not going to be a part of this committee. If you are a board member, you can say that I will not take participation in this board meeting because I find there is a conflict of interest. Safeguards that can be implemented to address conflict of interest, what can be done? Restructuring. That means you may have to change the composition of the team, you may have to change the committee, or you may have to segregate, separate specific duties and responsibilities. So duties and responsibility will be redesigned in such a manner that conflict of interest is either eliminated or reduced to the acceptable level. Second is seeking appropriate oversight. That means you can take the help of a supervisor, like supervisor from executive or non-executive director. So in addition to you participating, there must be a oversight committee who will look into the decision taken by you, which can be executive, non-executive director, and then you will have to give disclosure and consent. If you find that there is a conflict of interest, then disclose the conflict of interest and how threats were addressed to the relevant parties. As a good professional, you have to disclose whenever there is a conflict of interest, that there is a conflict of interest and how you have taken steps, what steps you have taken to remove those threats. Then if there is a conflict of interest, you will have to obtain consent from the parties involved. Those who are involved, disclose to them that there is a conflict of interest. If they approve, you will be party to the decision making. And then if there are conflict of interest, go to the higher authorities, take their suggestion, take their guidance, and if applicable, if it is not available within the organization, you can even go to the institute, or you can take legal counsel help, or you can take the help of other accountants, and this way you can resolve the conflict of interest, and that is a correct way to eliminate the threat. While taking all these steps, keep in mind you will have to maintain the confidentiality when sharing information and seeking guidance, because when you are going to seek guidance from others, you will have to share information with them. But at the same time, confidentiality is also an important fundamental principle of ethics that should be taken care of. Now we will solve problem number 3 from your study material. While solving such questions, you will have to keep 3 things in mind: financial reporting, fundamental principle of ethics, and third, code of ethics. If you can divide your answer into 3 parts, it will be great. This chapter is a good combination of knowledge of FR and audit. Question is, Alap Limited's director feels that company needs a significant injection of capital in order to modernize plant and equipment, as the company has been promised firm orders if it can produce goods of international standard. What do you mean by this? The meaning of this is that you need more capital in business. You have received one order, firm order, confirmed order, but at the same time you have to maintain international standards while producing goods. The current lending policy of the banks require prospective borrowers to demonstrate strong projected cash flow. So to raise the funds, you go to the bank, but banks are saying we would give loan if you have strong projected cash flow. You should have positive and high cash inflows coupled with a debt service coverage ratio exceeding 10, and your debt service coverage ratio should be 10 or more than 10. However, the current projected statement of cash flows does not satisfy the bank's criteria for lending. If you give the current projected cash flow, you will not get the bank loan. Directors have told the bank that the company is an excellent financial position. So this is misleading the bank. Okay, you are giving false information to the bank. The financial results and cash flow projection will meet the criteria. Internally they know that it will not meet, but they are telling the bank that we will be able to produce cash flow which will meet your lending criteria, and the chartered accountant will submit a report to this effect shortly. So they will go to a chartered accountant, they will take a report from the chartered accountant about the projected cash flow. The chartered accountant has recently joined Alap Limited. Oh, he is a new employee. He is confused. What should I do? Internally they know that they do not have enough cash flow to satisfy bank's criteria for lending, but the management is pressurizing him that you prepare a projected cash flow statement which will meet the bank's requirement, and has openly stated that this is a threat, that he cannot afford to lose his job because of financial commitment. This is a new employee like you. His family is dependent on his salary. He cannot afford to lose his job. He knows that our cash flows are not sufficient to meet the bank's lending norms, but the directors are saying you prepare a projected statement which will meet bank's lending norm. So he has got an ethical situation here. If he reports honestly, he will lose the job. If he does not report honestly, he will compromise with the integrity and objectivity, which is against the basic fundamental principle of ethics. Plus, of course, it will be violative of the code of ethics. Required, discuss the potential ethical conflict. So ethical conflict is whether it should follow the instruction of the bosses and prepare a projected statement of cash flow which he knows is not true or which he knows is false, which may arise in the above scenario. And the second ethical issue is he has to look after his family member also, because he cannot afford to lose his job. He has got financial commitments. And the ethical principle which would guide the chartered accountant, which would guide how the chartered accountant should respond to the situation. So this question is about projected cash flow statement. Projected cash flow statements are outside the scope of Ind AS. Ind AS will deal with cash flow statement which have already been prepared, okay, or based on the transaction which I have already entered into. So ethical conflict involves whether to follow boss instruction or save the job, and save the job, or follow integrity principle and lose the job. So I am asking you what you would have done, because next year you will be also a new employee in the company and your bosses are going to ask you to do the same. They will say, you don't worry, you don't worry, you write whatever we are saying, otherwise tomorrow you are not required in the offices. We have to ensure that we get loan from the bank. Taking bank loan is very important for us at this stage, even if it amounts to giving false projected statement of cash flow. So some students who are in the class or who are online are saying that we must follow integrity even if it amounts to losing the job, because there will be so many other employers who would be interested in hiring people like you because of your honesty, because of your integrity, because of your straightforwardness. Okay, and they will give you the job. That is one thing which may arise. So you are right. And the ethical principle which might guide. So if you follow boss instruction, I am not following integrity, I am not being objective, I am not being professionally competent, and this is not a professional behavior. So these are the threats to my fundamental principle of ethics. My integrity is not there, my objectivity is compromised, I am not acting in professional competence manner, and I am not behaving professionally. So what will you do? First of all, you should go and talk to your bosses that what we are doing is not ethically, morally correct, and therefore it will not be in the long term interest of the organization to give a false statement of cash flow to the bank. Sooner or later the bank would realize. Don't think that banks are fools. They will realize, and maybe in future the company's reputation can be affected. Even if the boss do not listen to him, then he can take advice from legal counsel, he can take help of other accountants, senior chartered accountants in the organization if any, and if nothing works out, then the last option would be to disassociate yourself from this assignment. You can tell your bosses that I will not be a part of this team which is involved in this projected statement of cash flow. It might result into you losing the job. But if you follow this, what bosses are saying, then you are also violating code of ethics. What is the clause you are going to violate? You are going to violate clause 1 of part 2 of schedule 2. You have failed to act diligently. You are making a gross negligence. You are making a gross negligence in your professional work. So you will be guilty under clause 1 part 2 schedule 2 of the Chartered Accountants Act, gross negligence in performance of the duties. So that way you have to write the answer. The answer institute has written only comprise of one full scape page. Is it right? Difficult for you to remember the answer. So the only thing that you can do is you have to make a quick summary, a small summary, and identify what are the key points you will carry forward in this answer. Okay, so please today read the answer. You are a chartered accountant employed in a company. You have to ensure that the reputation of the institute is also maintained. By writing wrong or by presenting false statement of cash flow, you are harming the bank, you are harming the stakeholders of the company, because sooner or later it will be discovered, and it is also affecting you as a professional because you are not treated as a professional with integrity. Your bosses will understand that if you threaten this person, he is willing to compromise with the integrity. So never succumb to the threat or the pressure of the top management when it comes to maintaining your integrity. As one student rightly pointed out, there are other 10 organizations who may like to hire you for your integrity. Is it right? So integrity is very important. Next is appropriate action. This I have explained to you. Only thing you have to do, you have to read, and while writing the answer, underline this. At the end, you have to also give reference of clause 1 part 2 second schedule, which talks about gross negligent in conduct of duties. Can we come to next page now? Preparation and presentation of information. When preparing or presenting information, as a chartered accountant, every day you have to compile information, present information, submit information to different parties, different stakeholders like banks, shareholders, financial institutions. What are you supposed to do? You are supposed to follow relevant reporting framework. For Ind AS company, you have CFFR, Conceptual Framework for Financial Reporting. You have Ind AS. You have Schedule 3. You have Companies Act. Okay, all these you have to follow while preparing the financial information. Second thing, your information should be presented in such a way that it is not intending to mislead or influence contractual or regulatory outcomes inappropriately. Information should not be written in such a manner so as to mislead or influence. And then you have to exercise professional judgment. Professional judgment is required, which should represent the facts accurately and completely, correctly, completely in all material aspects. Second, describe clearly the true nature of business transactions or activity. When you are writing some report, it should clearly mention what kind of business activity or business transactions you are reporting, and then you have to make a correct classification and record information in a timely and proper manner. So correct classification, complete information, complete and proper disclosure about nature of business transaction or activity, not omit anything with intention of rendering the information misleading. Same thing, you have to not only report what is required, you should not omit also which is required, and by omitting it can be misleading or of influencing contractual or regulatory outcomes inappropriately. Like for example, provisions not made will increase the profit, and when it increases the profit, you might win some contract because of regulatory requirement that companies should have a profit of this and this amount. So you are misleading by not providing information about provisions. Companies can do that. Okay. An example of a contractual or regulatory outcome inappropriately is using an unrealistic estimate with the intention of avoiding violation of contractual requirement such as debt covenant or a regulatory requirement such as capital requirement for financial institution. For example, life of an asset. Instead of 5 years, you take 20 years. What will be the impact? What will be the impact? Profit will be more. Profit will be more. Less depreciation, more profit. Profit will be more means reserve and surplus will be more. Reserve and surplus will be more means capital adequacy ratio will be higher. Capital adequacy ratio will be higher. Okay. So, by changing the estimate of the life of an asset, you can artificially increase the profit. You can increase reserve, other equity in the balance sheet. Your debt equity ratio will improve. Oh my God. But that is not professionally correct. That is against the fundamental principle of ethics. Okay. You don't make provision. That will also help you with this. You make lower provision than what is required. That can also improve your profitability in such scenarios. Therefore, accountant has got lot of tools and technique available to manipulate the profit. But then the fundamental principles of ethics says he should not do that. If he does that, he is violating fundamental principle of ethics. Next point is use of discretion. Sometimes we need to make discretion while preparing financial or presenting financial information. Exercise discretion in professional judgment. You can make discretion. Okay, sometimes we might have to take discretion, like whether useful life should be 5 year or 6 year. They can be very close. So I have to use my discretion here. Or residual value. Sometimes discount rate. At several places discount rate may be required. Fair value of assets and liabilities might require some discretion. Okay. Provisions may require some discretion because they are based on estimation. You are allowed to do this, but you have to make professional judgment, honest, based on your knowledge, training, past experience. You can make discretion without intending to mislead or influence outcome inappropriately. Discretion should not be used to mislead or influence the outcome. Like useful life is 5 or 6 years, you may take 20 years and therefore you don't provide depreciation. You know residual value is going to be 0. Take 25 lakhs, less depreciation, more profit, more other equity, more capital adequacy ratio, lower debt equity ratio. Student will think I am giving them ideas how to manipulate. No, I am just giving example. Don't do that. Example of misuse of discretion. So how you can misuse this? I have told you estimates, because accounting Ind AS 8 requires you to make estimates like provisions, useful life, residual value. Okay, and that is where you can make judgment, and you can also use it to manipulate also accounts. Then you can use your discretion in selecting accounting policies. There are few areas where more than one accounting policies are allowed. Example, write down cost model versus fair value model for property, plant, equipment. Then in Ind AS 16 we have this. Then cost or fair value of investment. Ind AS 27. If you quote the example in the exam, your examiner will be impressed. Your examiner will think that yes, the student has done something more than what was written in the study material. So that way, and when you have such choices, you can influence the outcomes. You can do it, but it should not be with the intention to mislead. It should not be with the intention to manipulate the outcome. So making choices is allowed, but the intention should not be to mislead. Then another example is timing of the transaction. Okay, like while making provisions, we can think that this provision will be settled after 2 year, 3 year, 4 year, 5 year, 6 year, and when you compute the present value, the answer will be influenced. The answer can be influenced. This can impact your answer. While computing impairment loss, timing of cash flow can affect the recoverable amount calculation, and that can impact your impairment amount also, and it will impact profit. Then structuring transactions. Structuring transaction, for example, leases. You want to enter into a 3-year lease, or what you can do, you can enter into 6 leases of 6 months each. Now if you enter into leases of 3 years, you will have to create ROU asset in the books, and you have to create lease liability in the books. So this will bring one liability in the books. This will result into depreciation in the books. But if you treat as 6 leases of 6 months each, you can use short-term lease exemption, and you may not show the ROU asset and lease liability, and that way you can prevent lease liability from appearing in the balance sheet. Because if lease liability appears in balance sheet, your debt equity ratio can be affected. That is called structuring a transaction. Or similarly, in a revenue transaction, you can provide 3 or more services or performance obligation and merged into one and not separated. So you can manipulate revenue recognition there. And then disclosures can be given to misrepresent information. Instead of giving disclosures required by Ind AS or Companies Act, you may give disclosures in such a manner it may misrepresent information. Consider the purpose, context and audience when exercising professional judgment. You make discretion, but while making discretion, you have to take into account the purpose of exercising discretion, the context in which you are making it, and who are the stakeholders who are going to use your information. In pro forma reports, pro forma means estimated, not final, budgets, forecast, include relevant estimate, approximation and assumptions for informed decision making. So while making budgets, forecasts, we do make estimation, but then it should be based on those assumptions and approximation which are required for informed decision making. Just because you are making budgets does not mean you will put any number. It has to be relevant for informed decision making. Next area is relying on the work of the others. Do we rely on the work of others while preparing financial statement? The answer is yes. Give me few examples where we may rely on the work of others while preparing financial statement. One example is very correctly given, actuary. Then legal, you may take the help of legal, or tax experts, or engineers, architects, technical experts. Is it right? So we may take their help. For example, for provision for employee benefits, we take the help of actuary. For calculating provisions for legal liabilities, we may take the help of lawyers. For making provision for income tax, deferred tax, we might take the help of tax experts. For example, when you are doing construction business, for estimating the stage of completion, you might take the help of architects, engineer, project managers, who will certify that certain percentage of work has been done. For measuring WIP, work in progress, you may require the help of some technical experts. So can we rely on their work blindly? Can we rely on their work blindly? Can we rely on their work blindly? Self-check is must. You are right. Self-check is must. Self-check is must. So you have to apply your professional judgment. Just because somebody has given certificate, you can't just take it on face value. You have to apply your professional judgment. So while using the work of others, you have to see their reputation. Are they reputed firms, reputed persons, their experience, their expertise, what are the resources of these other organization or individuals? Then you can take their work and consider whether the other individual is subject to relevant professional and ethical standards or not. So even this other individual should follow some professional and ethical standard while executing their work. Prior association with or consulting others can provide information about reliability of other individual or organization. If you have already worked in the past, you can use their work, or you can consult others who have taken help of such individuals or firms, and after applying all your professional judgment, then you will accept or rely on the work performed by others. Next point is addressing information that is or might be misleading. Oh my God, when you are the chartered accountant, you may come across misleading information. Okay, then you have to take appropriate action. I remember when I was auditing a company. Do you want to know that example? Okay. So there was one transporter who has submitted one bill submitted a bill, and in the transporter bill the truck number was written, some number was written. When I carefully looked at the number, truck number, the distance, because the payment was made on the basis of distance, some 5 rupees, 6 rupees per kilometer, like this, I found that in one day this truck has covered 20,000 kilometer. In one day a truck has covered 20,000 kilometer. Oh my God! Even the plane used by the Prime Minister cannot travel so much non-stop. Okay. So then one has to inquire what is wrong there. That is my professional judgment. Sometimes we have to ask questions. When he gives me the bill, there is an amount, I will not just do tick mark. I will see whether this information is possible. Unusual data we have to check. Unusual data. Then maybe we will try to find out the reason. Sometimes clerks make mistake. They don't bother to change other detail. He only changes some basic numbers, and that is why it is possible such kind of information. But it can be genuine also. It can be genuine also that they have purposefully made mistake. When you do the audit of sales return, now this is also we have found in some companies when we were auditing sales return, immediately after year end, there are lot of sales return entries. So what is happening? What is happening? They are booking sales in the first year and they are showing sales return in the second year. Sir, why will they do it? Answer: they want to show more sales in this year, more profit. Sir, why would somebody want to show more profit? Share price will rise. Or if the company is about to go into IPO, suppose unlisted company, but they want to get themselves listed in the next 6 months, they have to show good performance of the earlier year, because accordingly they will charge premium to the shareholder, right? So these are information which you need to know, and you can find out that there is something wrong, and then one has to take appropriate action. If you are an auditor, you can qualify the report. If you are an employee, then you will have to report to the higher authorities. Go to the senior chartered accountant, CFO, board member. Okay. So the steps you will take if you are an employee, that you discuss the concern with superior or the management. Then you request them to take corrective measures. Companies may have organizational policies. The organizational policies may include that in case if you find some misleading information, what policy and procedure you have to follow. As an employee, you will follow that. And if the organization fails to address the issue, why? Sometimes the top management are involved. Why top management is involved? Because their bonus is based on profit. Their promotion is based on profit. Their incentive is based on profit. So what they will do? They themselves are involved in inflating the profits by booking bogus sales. Okay, by not making provision, by using a useful life much longer than what it should be. All these are tricks followed by the management to inflate the profit. Then the accountant should seek guidance from the institute or the auditor or the legal counsel and determine if there are requirements to report this issue to third parties or regulatory authorities. So you have to also check, is it required to be reported to legal authorities? If all options are exhausted, you have informed the management, you have informed the institute, legal counsel and other authorities, and the information still remains misleading, better you disassociate yourself from it. Officially you disassociate, because later on if the inquiry happens, if the fraud or error gets discovered, then you will also be held guilty of professional misconduct. So you should have everything documented so that others can't blame you for being negligent. Okay. And the last option is resignation from the organization may be necessary in such cases. It is better to disassociate with such organizations who are involved in such fraud or misleading activities, because your reputation will also be affected. People will say this person was working in that organization, and then in future you will not get a proper job or responsibility which involves responsibility. As one student rightly said, if you maintain your integrity, there are 10 more organizations which are ready to hire you. Don't worry, you will find a job. Okay, so we'll discuss one example today. Illustration number 4. Sunshine Limited, a listed company in the cosmetic industry, has debt covenant. Debt covenant means conditions of loan attached to some of its borrowing, which are included in the financial liabilities in the balance sheet. These covenants mandate the company to repay the debt in full if company fails to maintain a liquidity ratio. So there are conditions. First, you have to maintain liquidity ratio, means current ratio, liquid ratio should be more than a certain number, and operating margin means profit margin should be more than a certain specified limit. So this will put pressure on the company to maintain liquidity ratio and profit margin. So what the directors will do now? Directors have taken loan. If they don't fulfill the requirement, you have to repay the loan. Directors along with CFO of the company. And who is the CFO? Chartered accountant, are considering entering into a fresh 5-year leasing arrangement. They want to enter into a 5-year leasing arrangement, but are concerned about the negative impact and any potential lease obligation may have on the above mentioned covenant. So if they enter into a lease agreement, they will have to pass an entry ROU asset account debit to lease liability. When you will record ROU asset, you have to provide depreciation also. Depreciation to ROU asset, Ind AS 116. You have to provide for finance charges also on lease liability. Finance cost account debit to lease liability. This is what we have learnt in Ind AS 116. And the important thing, this lease liability will appear in the balance sheet. So that will affect your liquidity ratio, because some portion of the lease liability payable will be a part of current liability. Lease liability payable within 12 months will be current liability. So that will affect liquidity ratio, and depreciation finance cost will affect your profit. What this company wants to do, see the creative accounting and creative structuring of transaction. Accordingly, the directors and CFO propose that the lease agreement to be drafted in such a way that it is a series of 6 10-month leases. So instead of 5 year, which is 60 months, 6 leases of 10 months. rather than single 5-year lease in order to utilize the short term lease exemption. So if you take short term lease exemption, then you are not required to bring ROU asset and lease liability in the books. Okay, and which way these two items and these two entries in the profit and loss will be eliminated. Only thing you have to show is the lease payment as an expense. This would then enable accounting for the leases in their legal form. Very good. Many companies do that. Honestly speaking, this is what companies have started doing since this Ind AS 116 has come into picture, because they don't want to bring ROU asset and lease liability in the books. It affects their financial ratios badly. It is a window dressing. They don't bring it into the books only because the return on asset will go down, return on capital employed will go down, debt equity ratio will increase, liquidity ratio will go down. So what you do, don't enter into more than 12 months lease, enter into a less than 12 months lease, and don't bring lease accounting into the books only. Simply transfer lease payment as an expense. The directors believe that treatment will meet the requirement of the debt covenant, though such treatment may be contrary to the accounting standard. Discuss the ethical and accounting implication of the above issue from the perspective of the CFO. The CFO is a chartered accountant. Financial reporting, I have told you, substance over form. In substance, a series of 6-10 months lease is a 5-year lease contract only, and therefore they should bring ROU asset and lease liability. ROU asset will be depreciated, lease liability you will provide for finance cost, make the payment. If the company does not follow the substance of the lease, rather than it only follows the legal form of the lease, then this financial statement would be misleading. It will amount to window dressing. It will amount to improving the ratios than they are actually the ratios, than the actual ratios. CFO, being a chartered accountant, has got an ethical dilemma here. On one hand, it has to ensure that bank does not ask for repayment of the loan. On the other hand, he has to show true and fair financial statement also. Financial statement should not be misleading. Therefore, what the CFO should do, he should go to the board and he should tell the board that the correct treatment of leases. If the board does not report or agree to him, then he can report to the institute or take legal advice, can disassociate himself, or can even resign. But if he continues to follow the board's instruction and follows misleading accounting treatment of the leases, then he will be guilty under clause 1, part 2, schedule 2 of the Chartered Accountants Act. Am I right? Clause 1, part 2, second schedule. Very good. And then he will be guilty of negligence. He will be guilty of not performing his duty by performing due diligence. So this would be the answer. So your homework today would be read all the answers, make short summary of all the answers, okay, for your own benefit, so that one day before the exam you don't have to read these long lengthy answers. These questions will not be more than 4 or 5 marks. So you just have to write about 8 to 10 lines and summarize your answer. See you tomorrow. Thank you very much for being very enthusiastic students. Thank you very much.